Good morning. Welcome to IG's early morning call. It's Friday, the 16th of June. Let's take a look at the headlines as we wait the start of today's European equity markets. We're focusing on what's happening with the Japanese yen. It's steering a weaker path today after the Bank of Japan came through. No real surprises from the BOJ, but the Nikkei is posting its sixth week of gains. We've got a Tesco trading statement this morning. One of the focuses of attention has been what its wholesale business, Booker, has been trying to do. It's got some good numbers, but not nearly as robust as many had been hoping for. And late last night, it was on the way up for Adobe, earnings beating estimates. It's all about artificial intelligence. Take a look at volatility. It's been bumping along the bottom. At the moment, we're holding on to the small gains we saw yesterday at 1682. And as we'll see, we've got money going into equity markets today. What turned out in the 24-hour markets yesterday being relatively strong on the FTSE 100, building on that today at 76.42. Long trades across the board on the European markets as we see things at the moment. Interestingly, we are once again within a few ticks, in fact 6 points, of an all-time record high on the German DAX. Not too far away from the 16,338.5. And that will continue to focus the minds, I think, today of those that are looking potentially for an opportunity here to short these markets. And we've had this right the way throughout the year, and it really hasn't presented itself. The German DAX, from the lows we had back in October last year, is up 38.3%. We've got a continuation of that move up, and it's tech stocks that's really doing much of the heavy lifting, as we see on the States in just a few moments' time. This is let me go back onto a daily chart here for the French CAC 40, looking for a stronger start there as well today after losses yesterday. One of the poorer performing markets in yesterday's session. The French CAC 40 is showing gains at the moment at 73.12. So long trade across the European markets and much across what's been happening in the Asia-Pacific region as well. Overnight in the Asia-Pacific markets, the Nikkei actually ending up 0.4% and another week of gains to the Nikkei as we see that Japanese yen continuing to pull back. We'll get more on the FX markets in just a minute, as we've seen that Bank of Japan come out with an interest rate decision today. As expected, no move. But one has to ask the question, when are they going to steer a course away from dovishness into hawkishness? It is the only developed nation central bank which has not raised interest rates, and it's been scarred very deeply for 30 years plus of deflation. And as we get inflation beginning to bite, the central bank doesn't want to snub out any growth, any inflation in the economy. It wants to let it run for a while. As I say, we'll get more on that in just a minute. Hang Seng Stock Index up 1.3%. S&P ASX 100 also enjoying a lift in the session in today's trade. Let's wind the clock back to take a look at what happened late last night on Wall Street. And it was tech stocks once again that were in the mix, but it was matched by gains on the Dow yesterday, by gains on the S&P 500. I want to start off by showing you a chart on the Dow, because yesterday was a significant day, and indeed we're building on that at the moment at 34,418. I say significant. Yesterday it closed at levels not seen in this market since December last year, so it's the highest close we've seen in 2023. And as I say, we're building on that at the moment. I drew this line on here at 34,270 a couple of days ago, looking at a line to break. And in fact, we did break that intraday on Tuesday, but then pull back. But you can see a spectacular break of that. Now, where do we go from here? Well, I can quite clearly see this beating the highs that we had now back on December the 14th. And when you get a close beyond this level at 34,980, you're then onto levels there not seen since the 21st of April. Now, the Dow Industrials has been one of the poorer performing indices on Wall Street because, as I said, it's really all been about tech markets. The tech-heavy NASDAQ is up 42.9%. We've got a near almost halving, an increase of almost 50% on the market overall since the beginning of the year. 15,183, yesterday closing out at levels not seen there since the 28th of March last year. Very close to 18-month highs there on the NASDAQ. And that tech stock run that we've seen, as we've been highlighting, the breadth has been really quite narrow. In other words, it's just a few really large stocks that's driving this, the really big names that are getting into artificial intelligence and are delivering sustained business in the cloud. This is the S&P 500. As of yesterday's high point, we're up 14.75% at levels they're not seen since April 2022. So something like around about 14, 15-month highs for the S&P 500. And this long trade continues, just to continue to bring your stop up underneath trade. Now, let's take a look back, first of all, at what's been an interesting week in terms of central banks before we tee up what's going on in Japan with the Bank of Japan. Two very distinct headlines coming through, and to some degree, they're sort of polar opposites. The Fed and the ECB, having taken rates up a whopping 500 basis points, a full 5 percentage points. The Federal Reserve this week decided to go into a skip mode with expectations, though, that it still has two interest rate rises to go sometime later on this year. The European Central Bank yesterday, meanwhile, raising its main refinancing rate by a quarter point to 4%. It's highest since 2001, and it's signaled that it will increase rates again in July, warning that inflation is far from vanquished and a wage spiral is threatening. So that was the sort of the two versions of what's been happening in the markets for central banks this week. No surprise, though, from the Bank of Japan overnight as it maintained its ultra-loose monetary policy. Let's take a look at the details. The BOJ maintaining its negative 0.1% short-term interest rate target and the 0% cap on the 10-year bond yield. Core inflation in Japan has been above the Bank of Japan's target for over a year, keeping alive market expectations that the bank will phase out yield curve control sometime this year. But the focus remains on supporting a fragile economy. The Bank of Japan governor won't consider any move until durable wage growth accompanies price rises. If we look at what's happening for the dollar yen, you can see this week, intraday, we have peaked above this line of resistance at 140.92 and then came a little bit of a pullback yesterday. Today, we got more of a rise for the dollar against the Japanese yen, and we're approaching this line of resistance at 140.92. If we get a candle close beyond there, we're then onto levels not seen since November last year, and then potentially onto the highs up here at 151. The Bank of Japan Governor Kazuo Ueda's dovish stance has cemented the yen's status as the most attractive funding currency for carry traders, a factor which is helping to add to its weakening trend. Funding currencies rely on low yields, and we've had that in abundance in the Japanese markets, which is exactly what the Japanese economy has provided over the last 3 decades. The yen stands alone in terms of low implied yield, with a 3-month rate of minus 0.4% compared to the 30 other currencies analysed by Bloomberg, which have yields above zero. So where do we go from here? On this chart, you get a candle close beyond the 140.92. The next line to watch out for is the 142.25, and then there's not much stopping it then on the way up to 146. That's assuming more US dollar strength against that weaker Japanese yen. Just staying on what's happening on these charts here, just wanted to update you as well on what's going on in the Japanese equity markets, because this does have a relationship to that weak Japanese yen. It's pushed up the Nikkei to 33-year highs. Every week we take a look at a risk event for the week ahead, and it's no different here as we look ahead to the week starting Monday the 19th of June. It's the Bank of England's turn to look at interest rates. This comes on Thursday next week, Thursday 22nd of June. Just as the Fed did a hawkish pause, Bloomberg suggests the Bank of England will do a dovish hike. That is to emphasize their drive to keep driving down inflation, but at the same time keeping consumers on side. It's suggested that the Bank of England does go a quarter point, and then possibly it will go into some sort of pause mode. The risk event around this is the fact that it could either be very much more hawkish or perhaps more dovish than might otherwise be anticipated in the market. Let's take a look at a trade around this. This is sterling against the Japanese yen. We know the yen is weak. We know the yen's position has been exacerbated by the Bank of Japan's dovish policy, which continues. This is a chart which seems to have little or no end in sight. This is the long-term chart for the sterling against the Japanese yen. We're currently trading at 180.45. If you go back into history, you can see the last time we were at these levels was around, December 2015. And as I say, there seems to be no let-up. The one thing I would caution is that if you are long on this going into the Bank of England next week, if you're long sterling against the Japanese yen, just continue to keep your stop loss up underneath, very close underneath, to lock in those profits. At the moment, as we're standing here just before the equity markets open on Friday, to give you some sort of context, so we're 6 days away from the Bank of England's decision. We are absolutely at the top of the candle at 180.50. That means there are no sellers in this market at the moment for sterling against the Japanese yen. So the risk event next week, the Bank of England interest rate decision, high noon on Thursday, the 22nd of June. Now, let's take a look at some other markets. Going into what's going on corporate UK, Tesco, one of the big numbers, possibly the biggest company to watch out for today. First quarter like-for-like sales up 9%. Some analysts expecting lower sales growth. But disappointment could come with Booker's performance. This is the wholesale division of Tesco. Like-for-like sales in this branch of the business rising 8.4%. Investors expected the catering business to boost revenue with double-digit sales growth. And that could well be a bit of a disappointment for Tesco stock when things get underway. Online sales up 8.2%. The online market share, according to Tesco this morning, has risen by 75 basis points to 37.5%. You see a lot of Tesco vans delivering to people's front doors. I want to show you the share price chart. 264.8. If you are short on this, your stock goes up here to around about the 270 pence level if you're short going into the start of today's trade for Tesco. That being said, the FTSE 100 looking as though it's going to start on the front foot today with some gains. Tesco is part of that, so many obviously that track the overall FTSE 100 will want to buy into Tesco as a result of that alone. But I think further analysis might go into a deeper question about why Tesco is not making more of an opportunity here. With inflation, double-digit inflation still for food, there's a lot of question marks about the activities of some of these big supermarkets, but nonetheless, Tesco, in its words this morning, saying it's still trying to deliver growth for customers. That's one stock to watch here in the UK. One stock to watch when the markets get underway later on today in the US, certainly when Wall Street gets underway, is Adobe, the software company. Shares rising almost 4% in extended trade last night after the earnings and forecast both beat estimates. Let's take a look at the figures for Adobe. Posting earnings of $3.91 per share on revenues of $4.82 billion. The street anticipated earnings per share of $3.79 and revenues of $4.75 billion. Adobe's been focusing in on implementing, yep, you guessed it, artificial intelligence features, AI features in its software offering across the board. Earlier this month, it introduced Firefly, its artificial intelligence tool for generating images to its large business customers. A success, according to the group's chief financial officer. Over 500 million assets have been created on the Firefly website and in Photoshop, which is the main benchmark software editing software that Adobe does own. Regarding guidance, Adobe forecasts current quarter revenue to be in the range of between 4.83 billion to 4.87 billion and raised full year 2023 revenues to be between 19.25 and 19.35 billion, both at the higher end of analyst estimates. Now, it doesn't trade all sessions on the IG platform. I'll show you this chart. We saw this stock close at 490.85. You add 4% onto that, it takes it past the $500 level, and that then takes it onto levels not seen since the 11th of Feb. Things looking good for Adobe. That, of course, anything to do with artificial intelligence. Virgin Galactic, all sessions on the IG platform last night, very much in liftoff mode. It announced after the US markets closed last night that it would launch its commercial space flights later on this month. Earlier on yesterday, we did see a small rise in the stock, and then came this. All sessions on the IG platform, you can quite clearly see on the right-hand side here, at one point peaking at levels not seen since the 16th of February. So the reaction was compelling, shares gaining as much as 58% at the announcement before settling, up 31%. The first space flight will be called Galactic 01. It is planned between June 27th and June 30th. Galactic 02 will follow in early August, with monthly space flights expected thereafter. Delays in the launch have deeply affected the stock, which lost over 2/3 its value last year. And when you look at this chart, this proportional chart, and you look at the 30% way up yesterday, it's virtually nothing compared to the big picture and the amount of value destruction that has been since the record highs we saw back in 2021. You remember the race into space that we saw between Jeff Bezos, the Amazon space flight, and the spaceflight for Virgin Galactic. And since then, there has been this massive fallout. But we'll have to see how things go. And we hope for a successful flight and the people taking part in that. That's Virgin Galactic. Now, let's take a look at one other area of the market. In fact, two other areas of the market. We'll go for oil, first of all, oil and gold. Let's go, first of all, take a look at what's been happening with the oil price chart, because yesterday we saw an uplift in the price per barrel of Brent. This is, we're building on that today at 75.74. After a month of heavy declines, the number of oil and gas rigs in operation last week remained relatively stable, according to Baker Hughes. Total rig count fell by 1 to 695. This contrasts with the double-digit drops we saw throughout the whole of May. At the end of April, there was 755 producing rigs in the US. And look at that now, 695. So you can see quite a big, large drop that we've seen in oil rigs as of last week's Baker Hughes rig count. That's out at 6 o'clock this evening. The price of spot gold yesterday lifting as a result of a weaker dollar. You can see here we're using this blue line as support, which is the 100-period moving average, building on that today at 1961. That's it. Axel's back with charting the markets at 10:30 this morning. Do watch out for Tesco at the beginning of today's session. Could be one of the stocks on the move.